Good morning, and welcome to 1 Year Later, answering the top 10 PPP questions. My name is Dana O'Donnell, Director of Marketing with Schaeferman Lakeland. Attorney Scott Borsak, who is a partner and chair of the Schaeferman Lakeland Business Department, will be presenting today's program. Before we get started, I want to let everyone know that today's webinar is being recorded and will be emailed to you within 24 hours. It will also be available on our website, schaeferman.com. Should you want a copy of the presentation slides, you can download them from the Handouts tab. Scott will be taking more questions at the end of the presentation, so please submit any questions on the Questions tab, and we will try to get to as many as possible. Let's get started. Scott?
Thank you, Dana. Good morning, everyone. And as I have grown so accustomed to saying, welcome back, my friends, to this show that just doesn't end. Interesting title for today's program, 1 Year Later, answering the top 10 plus questions. I wish that there were only 10 questions here. I think over the passage of time, the number of questions have been reduced. The areas of inquiry have changed. With passage of new legislation and new programs, new questions, and a lot of borrowers, particularly from round one, have had the experience of submitting loan applications and are seeing, forgiveness applications, and are seeing some of the results of their efforts there as well. So let's get started with today's program. And if you've been with me before, you know that this program is intended for educational and informational purposes only. Nothing in the program is intended to constitute legal advice or to create an attorney-client relationship. Legal advice can only be provided through a consultation or by engaging a lawyer. And as you'll hear me say at the end of the program, we certainly are available for hire to assist clients and future clients with their questions and the challenges that they face. This has been a long, strange trip. You know, if you would have told me 14 months ago that this pandemic would have affected us all for over a year, I'm not sure I would have known what to say. 14 months in, we've had a number of legislative attempts to deal with the economic and other effects of the pandemic upon us all. We saw a Pfizer vaccine announced 8 months after the start of the pandemic, and really within weeks of the onset of the virus, we had the CARES Act. The CARES Act brought us the Payroll Protection Program and the loans and forgiveness that we've been talking about together now for a year. The SBA issued a raft of regulations and pronouncements under the CARES Act, changing focus and making up for legislative oversight. And we saw the Internal Revenue Service take an adverse income tax position on deductions available to borrowers. That was followed this past summer by the Flexibility Act. And what the Flexibility Act did was modify the Paycheck Protection Program. It granted exceptions for deficiencies in full-time equivalents, the so-called FTEs, that were due to reduced economic activity caused by compliance with social distancing and other employee safety requirements, or an inability to hire enough or qualified individuals. That was followed in December by the Economic Aid to Hard-Hit Small Businesses, Nonprofits, and Venues Act, and that brought us the second round of PPP. And what we found in that Economic Aid Act, the rest of those, the hard-hit small business and nonprofit and venues, is just too much of a mouthful, and I just call it the Economic Aid Act. we saw an expansion of the expenses that are now eligible to spend PPP money on and secure forgiveness. And it got a little harder to get a loan. You had to demonstrate economic impact of at least 1/4 reduction by 25% comparing to the same quarter in the prior calendar year. The potential borrowers were expanded. The list of not-for-profit entities that could participate were expanded. We saw changes in the so-called employee retention credit, and that was followed by the American Rescue Plan Act. And in the American Rescue Plan Act, amongst other things, there is now targeted relief for restaurants. And we'll point out a couple of those opportunities in some of the Q&A that follows. So there's been plenty that's gone on in this area, legislatively, administratively. A lot of borrowers have made their applications for forgiveness. A lot of borrowers have applied for round 2 loans. And the round 2 filing deadline was just recently extended from March 31st till the end of May. So, those of you who have been on the fence about making an application, you have additional time. But as you can see, the one constant through all of this, and this is a point that I have made previously, the one point through all of this is that we continue to change. The response from the government continues to be full-throated, and there are a host of benefits that are available for business owners who have been adversely affected. So let's get into some of the top questions, and these are questions that have evolved over the course of the past year. And what I've taken is the most frequently presented questions over the course of the year, as well as inquiries that I've gotten over the past 2 months or so, and mix them together. There's probably about 30 of these that we'll hit very quickly, and then we'll open the floor to questions which Dana will pose to me. So do FTE and salary reduction penalties apply together? The answer there is no. While it is possible that an employee who wasn't rehired could generate 2 penalties, one for salary reduction and one for FTE, what the SBA has said is that only one penalty applies where both are potentially existent, and it's only the FTE penalty that applies. So in those situations where an employee either hasn't been rehired or has had their salary cut and their hours reduced, the only penalty which the employer will face for purposes of determining forgiveness is the FTE penalty. Will a bonus given to an employee after funding of a loan be counted toward forgiveness? And again, the answer to that draws out on the determination of spending. Employers have to pay employees at least 75% of compensation that they would have received at the Q1 2020 rate. Amount of salary paid in a 24-week covered period can't exceed $46,154. Employers should be able to provide raises to employees in the covered period, and guidance does allow for bonuses, tips, commissions, and hazard pay. So long as you stay under an annualized rate of $100,000 a year, employees can be given additional compensation. Can payroll incurred or paid outside of the covered period be forgiven? SBA guidance provides that payroll paid after the covered period can be included in the forgiveness amount if it's made on the first regular pay day after the end of the covered period and it's incurred during the covered period. So payroll incurred before the covered period but paid during the covered period is also eligible for forgiveness. So although the SBA started out with a requirement for paid and incurred, in practice it has become paid or incurred during the covered period. Can I claim more than 24 weeks of non-payroll costs? SBA provided guidance and examples of utility cost payments, and in the example, they talked about a covered period that started June 1 and ran to July 26, obviously an 8-week covered period. On June 2nd, a particular borrower paid utility charge for May, which the SBA said was allowed. July 1, the borrower paid utility charges for June, which was allowed. And on August 1, after the covered period, the borrower paid utility charge for July, which the SBA allowed for 26 days. The guidance allows all of this and commented that because non-payroll costs are subject to a 40% limitation, that would limit any abuse. So long as you're staying inside the 40%, you can bookend your covered period with non-payroll expenses that you claim for forgiveness. I laid off my employees and they're on unemployment. They won't come back to work. What do I do? This is one of the most frequently asked questions, particularly where the pandemic bonus of $600 a week for unemployment was being paid, particularly in those states where unemployment compensation benefits were kind of high. So what the SBA has said is if you call your employees back to work, they're no longer laid off. And if they fail to report to work, they've abandoned their job. Technically, under state unemployment law, abandonment makes the employee ineligible for unemployment. So the SBA has said where an employee fails to return to their job after being called back, for purposes of salary and headcount tests, the employee is going to be ignored and excluded from consideration. So because of that, there wouldn't be any reduction in forgiveness for failure of this employee to return. They're considered as not employees for purposes of the FTE and salary reduction test. Now, in order to take advantage of this provision, the employer has to inform the employee in writing of their recall, advise that the failure to return to work could jeopardize their unemployment status, and then inform State Department of Labor within 30 days that the employee has abandoned their job. And what that will do is terminate their unemployment benefits. It'll also make the employer a little less popular with the employee, but it will get the employer the forgiveness that they were looking for on their loan. What if I can't hire back enough employees to operate my business? So the Flexibility Act, which was adopted this past summer, provides a safe harbor exempting employees from the FTE test. Employees who worked as of February 15th of 2020 who can't be rehired and the employer is unable to hire similarly qualified employees to fill open positions by the end of the 2020 year won't be counted as reductions in the FTE. Obviously, these dates are going to be extended for measuring the application of the Flexibility Act to second round applications for forgiveness. The employer needs to be able to document efforts to rehire, and the employer needs to show that they've made all these efforts in good faith. Now, what some employers are going to have to do, some employers wanted to file their applications for forgiveness as soon as their covered periods were ended, those employers obviously had to wait until the end of the year to claim the application of this provision. I believe that the SBA actually may have allowed a modification of this through the end of a covered period that was selected. I'm gonna have to double check that. Yeah, we'll take a look at that and get back to that point. How are employees who have retired or resigned treated? So the SBA has provided some guidance that employees who voluntarily change their relationship with the employer are not considered for purposes of any of the penalty tests. So if the employee retires, resigns, or requests a reduction in hours, they're not tested for FTE or salary reduction purposes. An employee who's fired for cause is also not tested for salary reduction purposes. How can an independent contractor pay themselves with loan proceeds? I've suggested that good business practice dictates that a sole proprietor maintain one bank account for business and another for personal banking. The PPP proceeds can be deposited into the business account, and then payments to the sole proprietor can be drawn from the business account to the personal account by check or transfer. Bank statements will prove the amounts that were paid to the sole proprietor from the loan proceeds. What are the limits on forgiveness for elements paid to business owners? Again, some of this depends on the covered period. As you know, that borrowers now can pick covered periods of anywhere from 8 to 24 weeks. But generally speaking, salary is largely the same. The maximum is 2.5 times the average 12-month wage from 2019 for compensation of a sole proprietor, self-employment earnings of a partner, and the compensation paid to S and C Corp shareholders. For health insurance, sole proprietors and partners are not eligible to claim those expenses as expenditures for purposes of forgiveness. S Corps, owners with more than a 2% stake or family members of such an owner can't have their costs considered. And C Corp does allow for health insurance costs to be treated as a good expenditure. Retirement spending, contributions to qualified retirement plans from employer funds are not good spends for sole proprietors and partners. In S Corps, the contributions are subject to the same cap for compensation. So that's going to be integrated, and the same thing for C Corps. How does the 60-40 test work? A test is applied to total spending, not the loan amount, unless you spend the entire loan on eligible expenses. Of the total amount spent, no more than 40% of the amount can be for non-payroll. The balance of the amount spent for forgiveness would have to be on payroll expenses, and that has to be at least 60%. So a loan of $200 where the amount spent is $150, of which 65 is for non-payroll and 85 is for payroll. Since he only spent $150, only 40% can be non-payroll. That's $60. So non-payroll in excess of 60 would not be eligible for forgiveness. The entire payroll spend of 85 would be eligible for forgiveness under this test. Can I increase contributions to retirement plans and get forgiveness? The SBA has said that accelerated contributions to retirement plans can't be forgiven. So the employer should make contributions at the same rate that they have done historically. How do we calculate FTEs? Full-time equivalent, or FTE, is an employee who works at least 40 hours a week. What we would do is determine the average number of FTEs employed for a month, and there's two methods to make this determination. You divide weekly hours by 40 and round to the nearest tenth, capped at 1, or you count full-time as 1 FTE and part-timers as a half an FTE. And depending upon the number of part-timers you have and how many hours they work, choosing one method or the other does make a difference. And I would suggest that you try both methods before you make a determination of exactly what it is that you're going to do in claiming one method or the other. My loan is under $150,000. What do I need to do for forgiveness? So one of the changes that was brought about by the Economic Aid Act was a simplified means of securing forgiveness for these smaller loans. The Form 3508S requires no documents to be submitted to your lender. You initial 2 lines basically saying that you've abided by the rules and that you've spent the funds properly. You sign your name at the bottom, fill out the demographic information on the next page, and you're ready to go. You're supposed to be given forgiveness, no questions asked. So the SBA has actually said that a large proportion of the loans that they made were under $150,000. So this change in the law at the end of last year ought to make it much easier for a good many borrowers to secure forgiveness. Remember, 3508S for those loans under $150,000. Also, these small loans are not subject to the FTE and salary reduction tests. So you don't have to demonstrate compliance there. That seems to be a significant gift from our friends in Washington. But who can use the EZ form for forgiveness? Self-employed individuals without employees, borrower who didn't reduce compensation of employees who were on staff during the first quarter of 2020 by more than 25%, and the number of employees or average paid hours from the first 8 weeks of 2020 were not reduced. So if a borrower basically paid their staff at least 75% and didn't cut hours, they can use the EZ form, as well as borrowers who are eligible for the safe harbor, that they were unable to operate during the covered period because of government regulations on social distancing and employee safety. You can use the EZ form as well. When is a forgiveness application due? So the application is due 10 months from the end of the covered period. Lenders have 60 days from the date on which the application is submitted. First payment under a loan, for those who have to repay, going to be due once the lender communicates to the borrower who timely submitted an application for forgiveness. If a borrower fails to submit an application, the first payment is going to be required 10 months after the end of the covered period. Why should I elect a shorter covered period? Now, this has been a evolving area in the law. If you remember, initially the covered period was 8 weeks. Then the Flexibility Act extended the covered period to 24 weeks. And then the Economic Aid Act allowed borrowers to select covered periods anywhere from between 8 and 24 weeks. So the reason for some to select a shorter covered period is that if they were able to spend the funds properly in 8 weeks and suffered some reduction in headcount or salary after the 8-week period or 10-week period or 12-week period, the ability to select the covered period when you could maximize your forgiveness would be a real benefit. The longer the covered period runs, the greater the burden on the business to be able to pay employees. Now, if you qualify for the FTE exception for an inability to maintain historic levels of economic activity because of social distancing requirements, and you also have employees that suffered a salary reduction, the combination of the excuse in the Flexibility Act, the safe harbor, together with the SBA pronouncement that you only count the FTE reduction where you have both a salary reduction and FTE, allows borrowers to be excused from reductions in headcount. And the proof that the SBA seems to be requiring is, merely checking the box and saying that you were unable to operate. So stringing all of this together allows borrowers to secure forgiveness based on the period of time that it takes them to spend the loan amount on eligible expenses without being subject to any of the penalties. And as we pointed out a number of times, the term of the covered period is elected on the application for forgiveness. Can I file for forgiveness before the end of the 24-week covered period, or for that matter, any covered period? Again, I suggest that you select the covered period tailored to the time it's going to take you to spend proceeds on eligible expenses. The SBA has said that forgiveness application can be submitted when the proceeds are completely spent, even if that occurs before the end of the covered period. If you just take a 24-week covered period and your funds run out in 20 weeks without relief from a safe harbor, you're going to find that you are facing a potential forgiveness penalty either for reduction in full-time equivalents or for salary. The $150,000 almost automatic forgiveness gives you no questions asked. So if you fall into that 150 category, it's obvious that you can get forgiveness without being subject to the penalty. For everyone else, filing early without shortening your covered period would be a mistake. So now that we have the flexibility to determine how long the covered period is, you should match your covered period to the period of time that you have proceeds to spend. Can I spend the entire loan on payroll? Absolutely. And I think you'll find that there is an advantage in the substantiation process to just claiming payroll, because payroll is the easiest thing to substantiate. All the SBA asks you to do is to provide them with copies of the quarterly employment tax reports, the 941s, and the payroll reports that are generated by your third-party payroll provider. The 60-40 test doesn't require that you spend 40% on non-payroll. It just says you can't spend more than 40% on payroll. So you can spend 100% on payroll. You could spend 80% on payroll. You just can't spend less than 60%. And again, as I pointed out a couple times, the borrower can cut off their penalty period by their particular selection of a covered period, having the covered period end when in the payroll period when their loan proceeds run out. How does the economic activity safe harbor work? I say we're guessing because the SBA hasn't put out any interpretive regulations on its application since the Flexibility Act provided the safe harbor exemption from the FTE test for borrowers unable to operate at the same level of economic activity as existed on February 15th. So long as the inability is due to complying with government regulations for sanitation, social distancing, or worker safety, and the borrower can make even the faintest of suggestions that they were so affected, the borrower is going to be able to check a box, initial a line, and that they're eligible. Now, not surprisingly, the SBA said that if you're completely shut down, that's sufficient. Well, thank you, SBA. I think we knew a complete shutdown was good enough. But, you know, do you have to suffer a 50% reduction? Is a 20% reduction enough? You know, looking at the round 2 legislation, which requires a 25% reduction, is that enough? Until the SBA starts denying requests for application of the safe harbor, we won't know. A lot of our clients who claim the safe harbor have submitted their applications in the last 30 days or so, and I haven't heard of very many situations where borrowers were denied forgiveness, particularly claiming the benefit of the Flexibility Act. Maybe some of you who are attending today's program have some experiences to be shared in the form of questions. But you know, so far anecdotally, you know, what I'm hearing is that borrowers have been treated fairly by their lenders and the SBA so far. There are a couple of outliers, but by and large, borrowers have been getting forgiveness, and that's good to hear. So yes, the SBA does seem to be accepting almost anything. I received an EIDL advance. How will that affect forgiveness? Well, at one point, the EIDL advance, usually of about $25,000, $10,000, was a grant, and the legislation required that the emergency grant be recovered and reduce the amount that a borrower was eligible for forgiveness. And what we've seen in the Economic Aid Act is that the EIDL grants are no longer recovered through reducing the amount eligible for forgiveness. So those of you who got the $10,000 grant, you should not suffer reduction in the amount eligible for forgiveness. I know a lot of borrowers who are anxious to be granted forgiveness filed their applications before this change in the law. And those of you who had your forgiveness reduced by the amount of an EIDL grant ought to be contacting your banks to be granted forgiveness, because the law did change, and you should not be asked to repay $10,000. Should I claim non-payroll expenses on my forgiveness form? We kind of touched on this in answering an earlier question. It does depend upon your situation. But if you've paid employees at 75% of the Q1 2020 rate and matched your FTE for the reference period you selected, the audit and review process, I think, is a lot easier if the only thing you submit is payroll. When you start submitting non-payroll expenses, you have to provide canceled checks, copies of the paid bill, you know, the purchase order or invoice. The banks have had varying levels of review of non-payroll expenses. And a lot of the underwriters and loan reviewers have told me that the greater the percentage of payroll substantiating expenditures on a PPP loan, the easier it is for them to review and the more likely it is that the borrower is going to qualify for full forgiveness. So if you can, and you're not facing a penalty situation because you manage to pay employees, again, have your covered period match the period of time that your funds exist, and file your applications on payroll only, so that there's less for the reviewers and underwriters to take a look at. Are PPP loans taxable, and are the expenses paid with proceeds deductible? So the answer to this question depended upon when you asked. So when we started with the PPP loans, it was clear that loans forgiven wouldn't be taxable, but the Internal Revenue Service took a position early on that because the loans could be forgiven and borrowers were required, in order to secure forgiveness, to spend the loan on expenses that otherwise would be deductible, the IRS said that allowing a deduction on amounts paid with tax-free money would be tantamount to a double dipping. And the IRS took the position that if you used PPP funds on deductible expenses, you couldn't claim a deduction for them. We always knew that forgiven loans weren't taxable. Well, the Economic Aid Act had Congress reverse the IRS on deductibility and provides that expenses paid with forgiven funds are eligible for deduction as ordinary and necessary business expenses, notwithstanding the fact that the funds the borrower got to pay these expenses are coming from government money that was forgiven. Are there new requirements for PPP Round 2 loans? Again, as I've suggested earlier, borrowers have to satisfy a quantitative test. They have to demonstrate that their revenue was 25% less in any quarter in 2020 than the same quarter in 2019. An entity not in existence until the third or fourth quarter of 19 can use the third or fourth quarter for purposes of revenue comparison to any quarter in 2020. And in order to be eligible, the entity has to be in business on or before February 15th of 2020. The SBA stated that loans under $2 million will not be scrutinized for necessity. So this 25% test will eliminate a lot of the questions that we had on economic necessity. Obviously, if your revenue is dropped by 25% in a quarter, it seems that economic necessity is pretty clear. I didn't get forgiveness yet on my round 1 loan. Am I still eligible for a round 2 loan? The answer there is yes. You can even qualify if you're not granted full forgiveness, so long as you spend the proceeds on eligible expenses. Second round loan is reduced only if you don't get full forgiveness on your round 1 loan. Are restaurants eligible for higher loan amounts? Most borrowers can qualify for a loan at 2.5 times average monthly payroll. Restaurants are eligible for a loan of 3.5 times average monthly payroll. Be mindful that grants under the Restaurant Recovery Act are reduced by first and second round PPP loans. And I've got one more of my canned questions, and then I'm going to start turning to questions from our audience. I've got a couple by email. So I'm basically 3 questions away from opening up the floor. What is the Restaurant Recovery Act? It's a grant program to be administered by the SBA, open to restaurants and taverns, among others. Eligible entities can receive a grant. This isn't a loan, so this is money that you don't have to repay. And it's 2019 revenue minus 2020 revenue, so the reduction in revenue that the applicant has experienced reduced by the PPP loans that a applicant received. So, simple example, if the 2019 revenue of an applicant is 100 and the 2020 revenue of the applicant is 50, they have $50 that they're eligible for grant money. And if they got PPP loans, that 50 is going to be reduced by the amount of the PPP loans. The application process is going to be operated by the Small Business Administration. There was a lot of speculation amongst practitioners when the Economic Aid came out, the Economic Aid Act came out, that applicants for the Restaurant Recovery Grant would be using the federal government registration portal, the SAM portal, and would require a DUNS number. And the restaurant lobby did a pretty good job of lobbying the SBA and convinced the government to come up with a streamlined process. So the SBA agreed they're going to run this process themselves, but we don't know what this process looks like yet. And this portal is supposed to be open in roughly 30 days. So stay tuned for more information on that. So I have two questions that I got by email in the last couple of days. One question asks, if my understanding is correct, the second round of PPP allows for companies to pick their own covered period anywhere between 8 and 24 weeks, but the first round originally only allowed companies to pick either an 8 or 24-week period. My question is, for the first round, are we now able to pick any covered period between 8 and 24 weeks, or do we still need to pick either an 8 or 24-week period? So as a result of changes in legislation, borrowers now, for the first round and second round, can pick a covered period anywhere between 8 and 24 weeks. They're no longer restricted to the polls. Another question has to do with the number of employees listed on the application. Now, this particular borrower is looking at the 3508S application and asks about FTEs in particular. And what you all should be mindful about is that the SBA on the application for forgiveness refers to, on some applications, employees and others FTEs. So on the 3508S, which is the short form for the loans under $150,000 that just requires a couple of check boxes, the front page makes no mention of FTEs. They're talking about employees. Part-time, full-time doesn't make a difference. FTE tries to define the number of full-time equivalents. So when the application just talks about employees, and on the top portion of the S, employees at the time of loan application, they merely want you to count heads. So if you have 3 full-time employees and 2 part-time employees, you have 5 employees. No need to try to convert that to FTEs because they're not asking for that. When the SBA is asking for FTEs, they specifically say full-time equivalents. So unless FTE or full-time equivalent is called for, and they use employees at any time, they're literally asking you to count heads. Dana, I have run out of canned questions, and I'm hoping you have 1 or 2 in an effort to try to stump me.
I'll give it my best shot, but we have a lot of great questions, so I'll just dive right in. The first question is, I took my first draft in the second round. What supporting documents do I need to apply for a second draft in round 2?
So this borrower got a loan in the second round.
I
Is that what
think
the
so.
question is?
Yeah, I think so.
So you can only make one application per round. So if the borrower didn't make an application in the first round, made an application in the second round, and was granted a loan, they're done. They can't go back for another second round loan.
Okay. Do you have any guidance on how to deal with the SBA and the error codes that are delaying forgiveness? For instance, our application got tagged with a bankruptcy error code, but neither the business nor the owner have ever filed for bankruptcy.
So the best way to deal with that is a credit report, or if you have access to LexisNexis, you can run a credit search, and what that will show is the absence of a bankruptcy on the part of an individual or a business. And what you'll have to do is provide that information to the lender, and try to get the lender to provide that to the SBA. If you get a formal declination from the SBA, because of bankruptcy, the only way to deal with that is to file a protest to the Small Business Administration with a formal petition laying out the basis for your position. Now that's on the forgiveness side. If if those error codes are generated for an original loan application, again, if you can demonstrate to the lender that the codes are wrong with the credit report, you might be able to get them to reverse their position. The problem is they may run out of money before you prove that you're eligible.
How does having received PPP assistance affect the recipient's ability to sell its business? For example, by way of stock sale, LLC interest sale, merger, consolidation, asset sale, etc.
That's a great question. And I'm actually very happy that one of our listeners raised it, because it's a question that I should have included in the presentation. And no, it wasn't a plant question at the last minute. The SBA this past fall came out with a pronouncement for a procedure for the sellers of businesses to follow when trying to get consent from the SBA to sell the borrower's business. The SBA takes a position that the sale of substantially all the borrower's assets or a controlling interest in the equity of the borrower is an event of default under the loan documents. And what the borrower has to do is ask their lender for consent to engage in the transaction. And the way you do that is you send a letter or an email to your lender with a copy of the business sale agreement. You explain that you are about or have accepted an offer to sell, and the closing is going to be 30, 60, 90 days into the future. You need to complete your forgiveness application if you haven't already done that, and submit the forgiveness application to your lender. And last step, you have to deposit with your lender in an escrow account an amount equal to the loan proceeds. And that money is held in escrow until the lender and potentially the SBA, depending on the size of the loan, consents to the sale or agrees that you're entitled to forgiveness, at which point the escrow can be released. And most lenders have a form of escrow agreement to be used in this circumstance. Generally speaking, those escrows aren't held for more than 30 or 45 days.
If I run out of money on week 13, do I measure my FTE on week 13 or on week 24?
Well, if you run out of money in week 13, I suggest that you have your covered period end on week 13, so that you are tested for FTE in week 13 and not in week 24.
What type of expenditures are included in essential supplies?
The essential supplies are generally the products that the company relies on to stay in business. They can include, the raw materials for production. They can include packaging materials. There is a list of those in the Economic Aid Act, and the program that we did in January has a specific listing of all the potentials for those essential supplies. So I would refer you to that.
For the short form PPP forgiveness applications for loans under $150,000, what information does an applicant need to have available to complete the application, and what additional backup records does the applicant need to have available for a potential future audit?
So the 3508S, and you really need to look at this form to be convinced of what I'm telling you. And we have the forms on our website in the PPP resources page at schaeferman.com. Beside the personally identifiable information of business name, address, telephone number, it asks for the SBA loan number, the loan amount, the date the loan was dispersed, employees at the time of application, and employees at the time of forgiveness application, and your covered period. It asks, how much did you spend on payroll, and how much are you requesting for forgiveness? That's it. You should keep the proof of payroll expenditures. So, you ordinarily would keep your payroll records regardless. I would think if you kept your records for 5 years, you'd be perfectly fine. But again, the 3508S could not be easier.
When do you use the 3508 Easy form versus the regular 3508 form for forgiveness?
If you can claim the safe harbor, the FTE safe harbor for social distancing, if you're a sole proprietor, or if you have not reduced your FTEs and paid your employees at least 75%.
Does rent work like utilities as far as qualified payments?
Yes. So long as, and I'll give you the one caveat to that. What some borrowers have set up is a situation where they have one company that operates a business and another company that owns the property from which the business operates. And for tax reasons, they have the operating company pay rent to the real estate company but all that ends up in the hands of the same owner, because the same individual or group of individuals owns the operating company and the real estate company. In that case, the SBA has said that because the real estate company is owned by the same owner as the operating company, that borrower can't claim rent payments as qualified expenditures. Other than that, rent and utilities both get you the same benefit.
If I fall under the safe harbor for FTEs due to a mandated state closure, do I still receive the penalty on wage reduction?
No. You only have one if both penalties apply, because, and this gets granular by employee. So if an employee was full-time pre-pandemic and is half-time during the covered period and has a reduction of more than 25% of the salary, as to that employee, you are looking at two potential penalties, one for FTE and one for salary reduction. The SBA has said where you have the potential for both penalties, only one applies, and the one that applies is the FTE.
If a business is eligible for PPP forgiveness and the employee retention tax credit, can you discuss how to get the maximum benefit from both programs?
Well, there was once a period of time where if you went for PPP, you couldn't get the employee retention credit, and vice versa. And that was changed by the Economic Aid Act, so that now, if you're generally eligible for the ERC, the fact that you got a PPP doesn't disqualify you. What you can't do is use the same dollars that you claim for forgiveness in the PPP loan as wages that you paid eligible for the ERC. So what you need to do for ERC purposes is claim wages outside of your covered period for the ERC, or shorten your covered period so that you can take maximum advantage of the two programs.
Trying to pick a good question. What happens if a lender is not accepting applications prior to the end of the 10-month period for forgiveness?
Yeah, we don't want to call out any lenders, but there are a couple big banks out there that haven't opened up their forgiveness portals yet. It is hard to apply for forgiveness when a lender requires that you use their portal and their portal isn't open. I think we are coming up to, at this point, borrowers who are facing the circumstance where they have to apply for forgiveness. You know, borrowers who got funded in April and May, who elected an 8-week covered period, you know, they would go out to, you know, June, July for their covered periods. 10 months after puts them, you know, early in May of this year. So lenders who still haven't opened their portals really have got a couple weeks to get this together. If your application for forgiveness is due and your lender's portal is down, I would complete a paper form mail it to your lender certified, so at least you can demonstrate that you submitted an application in time, and that will, at the very least, forestall the beginning of payments because you made a good faith effort to comply with your obligations under the program.
For round 2 PPP loans, is a quarter defined as any 3-month period, or does it have to be January to March, April to June, etc.?
It is a calendar fiscal quarter. So first quarter goes from January 1 to March 31, second quarter April 1 to June 30, third quarter July 1 to September 30, fourth quarter October 1 to December 31. And you have to use the same quarter unless you're one of the borrowers whose businesses started midway through 2019, in which case, you're allowed to use the quarter you take in 19 to any quarter in 20 for purposes of qualifying for the 2021 round 2.
Are there any travel industry businesses other than restaurants or hotels and hospitality eligible for the 3.5 times average monthly payroll for PPP round 2?
Unfortunately not.
I have an employee who retired. Do I just attach his retirement letter to the application for forgiveness?
Yeah, that would suffice. That would demonstrate that the employee voluntarily separated from the service of the employer.
In your last webinar, you mentioned about the possibility of no penalties on the forgiveness for those who file using the form 3508S. Can you expand on that?
Well, the thought was and continues to be that the means of applying for forgiveness in the $150,000 loans are codified in a section different than the section for the forgiveness process for loans over 150,000. And the requirements for the small loans are tied only to what's set out in the specific statute for the small loan forgiveness. Since the raft of requirements set out for larger loans in the particular section of the statute don't apply to the $150,000 loans because they're not contained in the requirements for the $150,000 loan provision. I'm of the opinion that if you have a $150,000 loan or less, the FTE and salary reduction penalties don't apply. I've actually, put together a small analysis of this, and if the person who's asked the question wants to send me an email, I can, send them the specifics of the discussion, but it's probably a bit more granular than the folks who are still with us right now want to hear. How about one more, Dana?
Sure. If a borrower lost just one FTE, less than 25%, can they use the easy form?
Well, the easy form requires that they not have any reduction in FTE without a safe harbor exception. So if they can claim that the reduction in FTE was due to compliance with pandemic health regulations, that'd be a different story. But if they can't claim the safe harbor, then they shouldn't be using the EZ form. So I think we'll conclude our Q&A with that question. I want to thank everybody for tuning in today. We will be doing another forgiveness program next month. We continue to be available to answer your questions, to respond to emails, telephone calls when we can. And many of you have hired the firm to assist in the forgiveness process and to deal with lenders and the SBA when things go wrong. We're happy to continue to be of service. I very much appreciate the acknowledgments that so many of you have shared about these programs being worthwhile and of assistance. And it does make us very happy to know that people out there listening have benefited from this all. I'll ask you all to continue to be safe and well, and look forward to speaking with you next month. Keep an eye out for our little video clips. We'll continue that as well. Have a great day, everybody, and be well.